All right, gang. So, gang, looking at the market all day, looking at candlestick patterns all day can become overwhelming and frustrating and boring. And you start over trading and you just start trading impulsively. As you know, trading impulsively is a real thing in this market. You just get in a trade impulsively without analyzing the market, actually seeing the direction the market is going in. Is in the downtrend? Is it in the uptrend? Is it consolidating? You can see prices consolidating right here before heading back up. Like all those things come into factor before you just enter a trade. This is about entries. Before you just enter a trade, you have to put all that into factor, as you will lose your money and the broker will take all your money on purpose, as this is what the banks and the brokers will do. So just understanding we're looking for entries now. Okay, so we're going to focus on entries now. We're going to start diving in on entries, as this is the way that most traders lose their money, is getting in at the wrong entry, getting in at the middle of an uptrend, getting at the entry, placing an entry at the middle of an uptrend, and price goes crazy, as you think price is going to keep going higher and higher and higher. Price doesn't have to do that, and it doesn't do that, and it goes down and gets everybody out these trades. It's just easier to show you on the 15 more structured, but let's go to the 5 minute. Let's go to the 1 hour and the 4 hour for the overall trend. All right, gang. So we can see, gang, we were in an uptrend and now we're in a downtrend. From take profit 7 from 1853 is on January 25th all the way down to take profit 4 on January 28th. From January 25th to January 28th, and went all the way from take profit 7 in 3 days to take profit 4. Gold can move very, very fast. You see gold move all the way back up from take profit 4 all the way back up to take profit 5. And from January 31st to February the 9th, it took 2 weeks. Can happen very, very fast. So his understanding, gold went all the way up to take profit 5. And we're now going to focus on entries, explain it on the 1 hour as well, so you can see, we're in an overall direction. It's an uptrend. It started at take profit 4, and now we're all the way at take profit 5. So scroll in a little bit more. Go back. It could become overwhelming looking at candlestick patterns, as all these candlesticks represents 1 hour candlesticks. As it took from February 1st, all these candlesticks, 1 hour candlesticks, just to get back down to take profit 3, February 2nd, just to go back up to February the 3rd, take profit 2. It took 1, 2, 3, 4, 5, 6, 7, 8, 9 1 hour candlesticks before we see what this bearish engulfing pattern. Black candlestick engulfing this yellow candlestick just right after consolidation, and then we see a break of consolidation, and we see what black candlesticks. We see a black Marubozo candlestick push past trade 1 and trade 2, even past grade trade 1 and grade trade 2, all the way down to 1788. So your psychology is extremely important, as we're now focusing on entries. So we have our psychological levels: take profit 3, take profit 2, take profit 1. Take profit, once probably go to take profit 1, go to take profit 2, take profit 3, all the way up to take profit 5. So we have our psychological levels. This is one of the first things you want to do, is look for your psychological levels, draw your trend lines, analyze the market before you enter the market. Actually, before you enter the market, find where price was consolidating at. Put it all together before you actually enter a market. Candlestick patterns. So you see a bullish engulfing pattern right here, letting us know price is heading back up. Could have gotten a great trade 1 and great trade 2 for an entry. It rose all the way back up to take profit 1, as this is where you make the most money. For an entry, it's at the bottom. Where you lose the most money, you can see on the 1 hour as well. So it makes the most sense to just analyze the market first and see which direction price is going in, see the overall direction. Okay, we're in an uptrend. Boom, we're in an uptrend. Okay, cool. And see what price is doing before we actually enter a trade. So that's the first thing you want to do, is analyze the market. So that will make the most sense. Find your take profit levels. See our take profit levels. We have them draw on here. You can take these take profit levels, and and use them. Use these take profit levels. Because price went all the way up to take profit 5 now. So you want to find the best entries. Obviously, we have our entries right here as Great Trade 1 and Great Trade 2. Sometimes you won't find these entries. Sometimes it's very difficult to determine the overall direction of the market and find these entries. And as price is moving up, it makes a higher low. Once price makes a higher low, we're looking for entries. Boom, we got in Great Trade 1 and Great Trade 2 from take profit 2, and we're all the way up to take profit 5. So just because you find a good entry doesn't mean you should enter a trade. Just because you see a good entry doesn't mean you can enter a trade, as this market can do whatever it wants. Say you would have got in for a Great Trade 1 and a Great Trade 2 for an entry for a buy over here, and price goes down to take profit 3 and stops you out at 1788. Like, wait for price. Sometimes you think a good entry is a good entry, and it's not. Like, we need more confirmation. We have to see a bullish engulfing pattern. We have to pay attention to our candlestick patterns. A lot of factors come in when we're actually trading a live account. So you can see this trend line, draw your trend line. Candlesticks are about this trend line. Structure, we have to make sure price is making structure, making higher highs and higher lows and higher highs and higher lows. Game. So let's just go to this move right here. Actually, this was February the 8th. Yeah, February the 8th. Price from February the 7th was consolidating and retesting back down, making a higher low all the way down to take profit 2, 1815, and still making 1 hour candlesticks, still making lower lows from 1820 all the way down to 1815 before heading in the overall direction. And it took about a whole 2 days for price to head back up February 8th all the way up to February 9th. So sometimes just finding the right trading setup takes time. And we're looking for, we have to see solid confirmation. Like, this is a yellow candlestick on the hour candlestick pushing past, this consolidation right here. Once we see a push past this consolidation with this yellow candlestick, as price was consolidating right here as well at take profit 2. Price was consolidating at take profit 2. Once we see the yellow candlestick pass on the 1 hour, yellow Marubozo candlestick for the hour, buyers are pushing price up. Yellow candlesticks mean buyers pushing price up. This lets us know our psychological level at take profit 2 level. This lets us know, like, we have to combine everything: Fibonacci, trend lines, like RSI, moving average. You see our trend line, and candlesticks are still above this trend line. Our psychological level as well. This lets us know, okay, price is heading back up. Heads all the way up to take profit 3. We see another consolidation at take profit 4. We're waiting, being patient, and then we see yellow candlesticks pushing past take profit 4. All the way up to take profit 5. It's around like 10 o'clock, 11 o'clock. So we're waiting for solid confirmation. We see this yellow candlestick at February the 8th at 8 o'clock, and it pushes all the way up to take profit 3. From take profit 2, from 1817 all the way up to take profit 3. Actually above take profit 3, it pushes above take profit 3 all the way to 1828. From 1817 to 1828, depending on your lot size, it easily been, a couple thousand, couple 10,000, 20,000, couple hundred. And this is how we trade. We wait for confirmation. We use everything: moving average, trend lines, Fibonacci's, candlestick patterns. This is a yellow candlestick pattern. This is like a bullish engulfing pattern, as right here. As this black candlestick, as this yellow candlestick is engulfing this black candlestick right here from 7 to 8. From 7 o'clock, we see a black candlestick, and at 8 o'clock, at 7 o'clock, we see a black candlestick, and at 8 o'clock, we see a yellow candlestick pushing past this black candlestick. This is a bullish engulfing pattern on a 1 hour. So your psychology is everything, as you can lose a lot of money in this market. So that's one of the main reasons why people lose in this market. As you would try to enter at trade 1 and it heads all the way down to take profit 2, and before heading back up to take profit 5. All right, gang.